is going on, everybody? Welcome into another edition of the Daily Energy News Beat Stand-Up here on this gorgeous Thursday, December 21st, 2023. As always, I'm your humble correspondent, Michael Tanner, coming to you from an undisclosed location here in Dallas, Texas, joined by the executive producer of the show, the purveyor of the show, and the director and publisher of the world's greatest website, EnergyNewsBeat.com, Stuart Turley. My man, how we doing today?
It's a beautiful day in the neighborhood, and my grandson was playing with my mic, and I think I got something drug across the mic here. It looks pretty nasty.
Well, man, I keep a good fist distance from that. Nonetheless, you have an excellent show lined up for us. First up on the menu, another offshore wind farm project hits the dust. It's coming
It
like
bites the
clockwork here
dust.
now.
Another one bites the dust.
Yeah. Our next story, in a shocking turn of events, analysts say oil prices unlikely to hit $100 in 2024. Interesting. Next up, OPEC Plus enters 2024 with, quote, wait and hope as its strategy. Interesting. Yeah, it worked out for Obama. We'll see if it works out for OPEC. We still got hope, I guess. Next up, Red Sea tensions threaten to disrupt diesel market stability. I think this is a great article that highlights kind of, as we talk about global shipping and oil flows, the diesel flows coming out of what's going on in the Red Sea is interesting. So Stu will dive into that. And then finally, EU countries get Russian oil exemption via our friends at Reuters. Stu will then toss it over to me. I will quickly cover what happened in oil and gas finance. We saw markets tumble a decent amount today. Oil off session highs, maybe off the back of some interesting EIA data, which we will cover in the end. And then we'll let you guys get out of here and finish up your gorgeous Thursday. Before we do all that, guys, remember, the news and analysis you are about to hear is brought to you by the world's greatest website, www.energynewsbeat.com, the best place for all your energy and oil and gas news. Stu and the team do an outstanding job of staying up to speed with everything that you need to know to be at the tip of the spear when it comes to the energy business. You can check out the links below in the show description to see all the different links to the articles we are about to cover and timestamps, so you can jump ahead, hear what OPEC has to say, hear what analysts are saying. We're not going to hit $100 oil. Shocking. It's not Goldman Sachs, but you can also go ahead and check out emailing the show questions at energynewsbeat.com. Dashboard.energynewsbeat.com is our data news combo product. Looking to push that in Q1 2024. So I'm going to Brett those, Stu. Where do you want to begin?
Let's start with this one. Another offshore wind hits the dust. This one's kind of sad because it is very systemic of more coming around the corner. The developer Icebreaker, a small project in Lake Erie, announcing it's pulling its stakes on its 6-turbine project. Michael, it received a $50 million grant under Obama. You know how long it is to get attached to the grid? And the Energy Department has pulled the grant, and taxpayers will only get $37 million back. So somebody made, let me think, I went to OSU. How many millions did they spend on regulations, measuring rocks to make sure they get these things off?
All for 6 turbines. I mean, what could that power? Like, it could barely power anything.
No, I mean, you're talking, 6 watts. I mean, I'm kidding. Whatever.
I love this part. According to the developer, Icebreaker became financially untenable after the Ohio Power Sitting Board in 2020 required the turbines to stop at night between March and November to reduce the risk of migratory birds and bats from hitting the turbine blades.
Oh, yeah. And it's even funny. A large Dominion Energy, a large utility in Virginia, is moving ahead with its, consisting of 176, and is spending $625 million on the first U.S. built ship capable of hauling more than 300-foot long blades. That's a lot of money just to haul a blade out and put it up with duct tape. That's just amazing to me.
Yeah.
And here's the conclusion. I thought this was really good. Another offshore wind is calling it quits as inflation, interest rates, supply chain issues, and legal challenges are making it too expensive and difficult to exceed. Michael, we've seen that over the last 6 months. It is going to escalate and curtail wind. I still see solar as having some wind, and I had lunch with Dr. Ed Ireland and RT. Here's a great one. The young lady out of London came up with an idea for wind in subways. At first, I was like, eh, great idea. They all create wind. Why not put a little turbine down there every time it goes through? You could make some really nice. I think it'd be kind of cool. Let's go to the next one here, though. But another one bit the dust. All right. Analysts say oil prices unlikely to hit 100 in 2024. This brings up a bigger problem, Michael, but let's go through the top 3 bullet points. OPEC Plus faces record-breaking U.S. production and other supply issues. Barring a major geopolitical escalation resulting in large supply outage, oil prices are unlikely to reach $100 a barrel. Paul Sankey, record high U.S. oil production is a huge problem for OPEC Plus. This is where I think it's going to get a little bit dicey. Michael, we've had the Houthis and the Blowfish lobbing missiles all over, out there. They did 40 drones in the U.S. Now we have a consortium going out there and waving flags and everything, trying to slow down the Houthis from blowing something up. But we have BP moving all of its tankers. We have the supply chains going around, and oil just went. What's up with that? I don't understand it.
Well, it's because what this article is pointing out is that the fundamentals, the supply demand balance of oil doesn't look promising for higher oil prices. It actually looks fairly doom and gloom when you talk about the fact that we have, as this article mentions, record U.S. oil production. Supply is increasing from nations specifically. You've got Guyana, Brazil, who have really increased their offshore activity, which is one of the few areas offshore drilling where you can actually move the needle when it comes to worldwide oil production. A vertical well in mid-continent Anadarko is not going to move national oil production or worldwide oil production. But, the Starbrook block or the Liza project or block in Guyana is going to move the needle when that thing's doing 300, 400, 500,000 barrels a day. That will actually start moving the needle a little bit.
There's a quote in here. Warren Patterson, head of commodity strategy at ING, wrote, given the scale of cuts we're seeing, OPEC is sitting on a substantial amount of spare capacity, and that's somewhere around 5.5 million barrels per day. Here's where I think that there is a miscommunique between. He said communique. I was pretty smart. When you take a look at this this article, and you have Brazil saying, the head of Petrobras saying, we're going to pump everything we can. Then you have Iraq saying, hey, oh, by the way, we're now at 3.4 million barrels a day. We're going to pump everything we can. They're selling in the dark fleet. Russia's now up to 3.5% increase in their GDP. They're going to sell everything they got. The dark fleet is chewing away. I'm going to have tomorrow, or for our next show on Sunday, whenever it'll be next week sometime. What we're going to do is I'm going to have a chart with how much oil is coming out of production, out of the OPEC quotas into the dark fleet, because that's a lot of stuff. They're pumping more, and the demand for India and China is pulling that off of the market. It's a mess, Michael. I don't know, but I
blame it on the dark fleet, I guess, though.
The dark side. Dark side you are. Okay, let's go to OPEC enters 2024 with weight and hope. This one kind of goes along with that. And Ben Salman, Prince Ben Salman is keen on Alexander Dumas. All wisdom is contained in these two words: wait and hope.
Oh, yeah.
Uh, okay, so the Saudis again. He has said we need $100 oil,
Mhm.
and so you have the paradigm between the Ghost Fleet and the Dark Fleet, or the Dark Ghost Fleet, and then you have OPEC wanting money. Iran has got to fund Hamas. They've got to fund all these other things. Uh, um, so the chart in here says high, but not high enough. Uh, so you can see that it's at that 75. Um, there was an article yesterday that also came out on Bluebird, and they were saying that Brent was going to go up immediately, and it didn't. So I don't think anybody really knows what's going on with oil pricing, because the whole beautiful system that the Saudis and OPEC had in place is gone, my opinion.
Yeah, I mean, I think anybody telling you they know where oil prices is going is lying to you. I tend to agree with the article we covered just in this last segment in terms of under $100 versus over $100. I know,
Yep.
obviously, barring something political, it's true that Saudi is sitting on a bunch of spare capacity, and the question is, what are they going to do with it? Are they going to choose to hold it back, as this article that we're reading now is intended to do, in order to keep that Brent price what is hopefully 80 to 90 to what they hope to be $100? Or
Right.
is it more likely that they're going to start, pulling back on their cuts as maybe some of this, maybe the weakness second half of 2024 comes on? I don't know. If I'm OPEC, I'm 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 probably not adding to the market. I'm probably not cutting, though. $80 Brent is enough to
Yep.
sustain. We do know the Saudis are spending like crazy, attempting to go through a kind of a de-oilification in terms of their economy,
Right.
and ripping their economy from being
They're
solely
billions on
reliant on oil
hydrogen. Yeah.
to being only reliant on oil. So maybe higher oil prices for them actually gives them the revenues to slowly wean themselves off oil. So it is maybe a little bit of a catch-22.
Now,
In order to make more money, they got to hold oil back so that they can continue the transition. So it'll be interesting to see what happens. I don't think and again, anybody who tells you they know what's coming is lying to you. But really, when we speak of what's going on with oil prices, it's what's going on in the Red Sea right now.
oh, absolutely. Now here's let's go to the Red Sea tensions, but I'll tell you, the warmonger um oh shoot, what's his name? Graham.
Oh, Lindsey
Lindsey
Graham.
Graham. Oh my gosh, he's actually calling for us to bomb Iran's
Mhm.
oil field.
That's
No, step away from the microphone, dude.
Step
We do
away
not
from the nuclear weapons. Step
go
away
away.
from the
You do
nukes.
not have the football. Step away from Biden's side. We do not need to do that.
No.
Okay, let's go to here's where Red Sea tensions threaten diesel market, Michael.
Yep.
Here's a whole nother side of the Houthis out there playing around with them drones. These are not your drones that your dad used to fly around. These are some serious kind of drones. Um, the below average distillate stocks suggest an uptick in manufacturing construction next year. Iran has got another million barrels coming online, a million barrels per day, and then so does India, and so does China. So, oh yeah, guess who's buying the diesel and gasoline and products from China? Dun, 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 California.
I was gonna say Newsom.
and, and well, why did President Z show up, and why was it clean? I don't know.
He just
Okay.
wanted to meet our favorite governor, I thought.
He wanted some hairstyle tips,
Oh,
but when we take a look at the it's weird on how diesel is now also they're peeling some of the dark fleet off for diesel tankers. It's weird.
yeah. I
So
think this is a really niche problem that we've had bad diesel prices right now. I mean, if anybody remembers back in the early 2000s, diesel was always less than gasoline. It's that now market is now flipped, and where diesel is trading and for consumers at the pump much higher than gasoline, which is why food inflation continues to stay high. We think that food inflation has to do with food commodity prices. It does, but it also has to do with transportation costs. And with the majority of food being transported by truck, high diesel prices is only going to inflate that supply chain a lot more. So anything, the diesel market is already teetering. Anything that impacts that is going to be good. So I think while we won't see an oil price freak out, what we might see is slight, almost food inflation or slight supply chain inflation as we move forward if this diesel distillate problem becomes any stronger.
I couldn't agree more. And the other side of that coin, though, is the number one user of are you like before our podcast?
I was just flipping a coin.
Michael was starting to do a hula hoop.
I was flipping a coin.
Oh, flipping a coin. Here we go. Heads or tails? Heads.
Heads I win, tails you lose.
It's under the table. Okay, so the hula hoop dance threw me for a loop. Let's go to the next story, and I'll get back on this. EU countries get Russian oil exemption. Brussels allowed Slovakia to export fuel from the to the Czech Republic for another year. I'll tell you, Ursula over there, our good buddy Ursula, who's in front of the European Union, is just about like a dictator. It's just kind of, Luke Oil has warned that in response to discriminatory laws and other unfair, biased political decisions regarding the refinery in Burgas, it's going to review its business strategies. This getting involved in all of the countries' stuff, the EU is facing some serious backlash from putting their finger in the pies that they shouldn't be in.
And they continue to shoot themselves in the foot. So I'd expect
and the splatter's going to get the consumer. The splatter's going to get the consumer. So, what a day, dude.
What a day. So, all right, well, we'll move over to finance here, guys. Markets do not react well today. Down S&P wide down 1.5 percentage points. NASDAQ tumbles 1.5 percentage point. Bitcoin up 3.8 percentage points, currently trading $43,600. Crude oil, initial strength during the day, if only because of some decent EIA numbers. That benchmark unfortunately did turn negative when we did hear of that EIA print. Let me go pull it up here. I'm pretty sure it was a little bit negative. We didn't necessarily cover the API numbers yesterday. We saw from the Strategic Petroleum Reserve, we did see a 2.9 million barrel build. So the strength we had early in the trading session, and specifically coming from, I think, a lot of that Red Sea activity, halted a little bit that game. We were all the way up just a little bit above $75. EIA report drops, specifically saying a 2.9 million barrel build, and we saw some weakness heading into that afternoon session. We currently sit 73.61 as we record this, about 5:45 here on the 20th. Brent oil currently trading down about 6/10 of a percentage point, 71.41. But again, that's from our 3 p.m. open. It was actually up on the day. Natural gas prices $2.42. That's about a 0.8 of a percentage point off session highs. So as we move into the end of the year here, Stu, a lot of the activity for oil and gas, operators has kind of calmed down a little bit. I would be shocked if we saw a deal happen between now and the end of the year. But I think I highly recommend people go check out our deal spotlight that we're releasing. We'll be releasing episode 2 here shortly. We'll probably do it Monday or something. I don't know what we'll do. Monday's Christmas, so I don't know what we're going to end up doing here. We'll probably release it at some point next week. You guys have plenty of time to watch it. Go check that out. That's going to kind of cover the latest M&A deal that happened. Otherwise, I think everything's going to be fairly chill to the end of the new year, Stu. We're coming up close here. This, I don't think this is our last show for the year, but we're going to have very little news heading between now and the end of the year. People are starting to wrap up a little bit. So it's, we almost made it, folks. You got 10 days left.
But you know what, Michael? We have about 10 podcasts the kids have gotten getting ready to go out here.
Oh, absolutely. You're gonna have
And
too much content. You think you want, if there's one thing, if you're looking for an excuse to avoid your in-laws, we've got plenty of excuses for you. We've got podcasts galore for you.
yes, and
Specifically,
I'm
we've got
also we got some really good ones, Michael. I am interviewing a border expert tomorrow.
Okay.
He's been on the border. He is law enforcement. He's energy. He is one cool cat.
It's now okay.
And then George McMillan will be live Friday. We're going to go live to my LinkedIn on Friday, and he's going to be there. He's got a war correspondent and another doctor. Those guys were just on Redacted this morning. So, I mean, this is a big deal. Energy is at stake with the invasion going on.
No, absolutely.
We've got, so it's Kyle Reese is one of them. We have Irina Slav, Paula Glover, Ann Bradbury, Ralph Rodriguez, John Farrell, co-founder of Well Database. I mean, we got a packed set of stuff coming out for you to avoid your in-laws.
Yeah, absolutely. We got plenty of stuff when you want to avoid. Just fire up the Energy News Beat podcast. We'll probably also drop a couple of year in review shows where we kind of cover maybe our top segments. We'll get the team working on that. But with that, guys, we're gonna let you get out of here. Finish up your Thursday. You'll hear somebody tomorrow. Probably we'll drop somebody tomorrow in terms of an interview podcast. You'll hear our weekly recap on Saturday, and then we will get you. We will not be coming to you on Monday. That is actually Christmas. I think our first show will probably be Tuesday or Wednesday of next week, probably Wednesday. So, keep with us, guys. We'll keep you informed. For Stuart Turley, I'm Michael Tanner. We'll see you next week, folks. Have a Merry Christmas.